Hello everyone, this is Ryan with Numbers Up Finance, and I just want to do a very quick market analysis at market open on February 12th, 2019. That's Tuesday, and basically we are looking at the aftermath, or the beginning rather, of a significant price increase in the future of QQQ and SPY. This is the mini future for the NASDAQ 100 / NQ, and I have the daily charts pulled up here. So, though I've been expecting a pullback, there are some developments in the chart that I believe are key to look out for. So on the QQQ side of things, /NQ, we've had this significant downtrend line forming over time. It's not drawn perfectly here, of course, you can play around with it, but essentially this downtrend line has had 3 reactions leading up to this point since we've broken our October highs. And being tested 3 times, that means that I give it some validity because 3 points is where I start to validate trend lines. And what happened about a week ago is I was expecting a reversal somewhere around this point. We consolidated instead, and we ended up pushing right past this trend line as if it wasn't there, which was kind of significant. So what happened was, instead of getting stopped at this trend line, we got stopped at the 61.8 retracement level from our December low, as well as we intersected with what appears to be the 200-day SMA, acting as heavy overhead resistance. Rather than pushing down to what I believe to be a decent target around this 50-day SMA, it appears we might actually be back testing this trend line. And honestly, that's completely valid in my mind to back test a trend line of this significance. I mean, if you go on the hold, old resistance is now new support. We broke this resistance trend line, and now it will become our new support. Hasn't necessarily played out yet, but it's interesting to me that we have a reversal type candlestick here on the daily chart with a hammer stick, and now after what appears to be back testing that trend line, we had a red day yesterday, and now we appear to be reaping the rewards in the bullish side of things today. Do I think it's a good time to enter long? Not for a swing trade, no. This might be a good opportunity for day traders to come in, but the risk reward is just not favorable to longs right now. Especially with this overhead resistance. I mean, if you were to enter a long, I would recommend getting out before today's over because we don't know which direction this is headed yet. What would give the bulls a significant nod in my head is if we push right past the 61.8 fib level and this 200-day SMA. If we push past those two things, which is strong resistance, mind you, they're in the clear for a bit. I mean, there's some overhead resistance, of course, and we don't always have to reverse at a past reversal point. We can reverse anywhere, but if we push right through these points, the path ahead to this 78.6 fib level and maybe this 7-2-20 target around, you got some reactions there, decent amount actually. That's decent room to gain. So it could be time to enter long right now, though I won't be comfortable doing it until we break this heavy overhead resistance. But again, watch out for this back test because although we're incredibly overextended and although I think we're overdue for a decent pullback, a back test of this trend line might be developing right in front of us. So we can look at the same story for the SPY futures. This is /ES, daily chart, same deal. As opposed to QQQ, we have a triple top here, creating a heavy overhead resistance point at the 78.6 fib level. And we have a bit of a different setup, so we're not back testing any trend line. We have this downtrend line that I have drawn here, though it was only tagged twice, so it isn't of major significance. So that being said, it appears that this line with only 2 reactions isn't valid yet. It appears we're pushing right through it, and that's totally fine to push right through it. It's that 200 SMA that I think is still acting as the overhead resistance. Should we push past that 200 SMA, which again was old support, now it's new resistance, if we push right past that, then by all means, I would see a great longing opportunity with really good risk-reward ratio towards this 78.6 fib level. Until then, though, we're kind of we're in a battle of bulls and bears right now. The bulls are obviously winning today, though I wouldn't really see this as a good longing opportunity. However, I do see this as a potential foil of prior shortages. I think the charts are much nicer on NQ for this because the fib levels work a lot better, and we can point out this back test of a downtrend line much easier as well. So this trading range is kind of no man's land. We can consolidate a lot, but keep in mind on this way up, This is the third time now. I mean, we thought we had a reversal coming here, and we consolidated, and the bulls won. We thought we had a reversal here. We consolidated, and the bulls won. And now we thought we had a reversal here, and we consolidated. And will the bulls win again? It's looking kind of favorable in my mind at this point. But again, I'm not really set on anything right now. I know I had a short position set up after tagging off of this 200 SMA. Hasn't hit a stop loss yet, so it's okay. But if it hits the stop loss and we push right through this SMA and that fib level, expect a good longing opportunity. So that's all I wanted to point out. That downtrend line super significant. Some new chart developments that I'm a little excited for. And other than that, just keep an eye on the charts. I'll be back with any updates should there be any. This has been Ryan with Numbers Up Finance. Keep your numbers up.